What's going on, everybody? It's Young Man. Today is August 20th, 2026, and today we're going to be talking about Bitcoin, strategy, and MetaPlanet. These are the three topics we've been talking about and are going to continue to talk about. And ladies and gentlemen, the infinity print has officially begun as of yesterday. As of yesterday, the Treasury announced that they're going to be doing buybacks of their own product, 10-year and 30-year bonds, at a rate that is double what they already were. So, what that means is they're going to be purchasing the bonds that they're selling. In other words, they're selling something that has no buyer, and they're going to artificially continue to sell it so that they don't have to ask more, or I'm sorry, so that they don't have to ask less in return for what they're selling. And what they're selling is debt from the United States of America. Not only does that tell you a lot, it shows that the times are changing, the world order is changing. The United States' role as a global hegemon might be nearing its end. Nobody even wants debt from America. Nobody is willing to take a dividend to lend money to the United States. They might be if they would be willing to give a fair dividend, but it's common knowledge enough that inflation is so high that a fixed rate of 4% is not enough to lend the United States 10-year money for 10 years. It's just not enough. And they are unable to come to terms with that. And if they were to even try to come to terms with that and offer 5.5, 6%, the whole system would collapse because it's all built on assumptions that they would never have to do that. So today I just want to talk a bit about that, talk about what it means for Bitcoin, what it means for markets in general, and also just give just some input and the go over just the basics of how bond math works and how I think of the position that the United States is in, how it's likely that they're going to print money for the foreseeable future and will have no chance to stop along the way. That's what I want to talk about a bit today. Before I get into that, we saw Bitcoin jump 12% over the last 2 days from $63,000 to about 72 today. That's $10,000 in 2 days. So that's the type of price action that leads me to make videos like this, urging people to get in before the price convinces them to get in, because this thing moves so quick that you'll likely end up chasing it. And when we're at these very low levels, right up against the 200-week moving average, it doesn't need to have retail energy. It doesn't need to have a story behind it. It doesn't need any of that. You just need to, well, you don't need to do anything. You do whatever you want. I'm not a financial advisor, but you have to see past these things and just start accumulating before any of that happens. Because once that happens with Bitcoin, it just gets off to the races quicker than you can catch it. So that's one of the reasons why I talk about it the way I do. I have a feeling that it will be taking off sooner than later. And of course, nobody can forecast when that is. I'm not going to sit here and try to forecast when that is, but something tells me that we are running out of time to buy this cheap Bitcoin. And I think I'm going to have that feeling for a long time. Cheap, because cheap is relative. But all of that aside, I just want to try to explain the situation that the United States is in and how bonds work for somebody who's not really following things like the United States bond market or the sovereign debt crisis that is forming before our eyes, because most people are not paying attention to that. I wasn't paying attention to that until I got really interested in Bitcoin, which made me interested in macroeconomics and the themes that are going on in global markets, and just that type of information is not very popular, and a lot of people who aren't paid to keep up with it aren't going to keep up with it. But I think it's very interesting, and once it's described in simple terms, uh, at least in my experience, it becomes more interesting because you realize it's not something that you can't understand. It's just something that nobody explained to you. And so quickly, I just want to give the basics of how these bonds work because like I said, it's not as complicated as it seems. And I know a lot of people who would like to keep up with Bitcoin don't keep up with the macro side because it seems so complicated. But in short, the United States issues debt to individuals, to other nations, to anyone that will buy it. And the debt comes in the form of bonds, short term, medium term, long term, anything in between. They will sell you the debt. So let's say I have $100,000 that I don't need today and I don't plan on spending, but I don't want to put it in to the equity markets because there's a risk associated with that. I don't want to put it in real estate because I already have a mortgage. I don't want to put it into uh, a crypto asset because that has even more risk than equities and it's associated with crime and scammers. I don't want to put it in anything. So the option that I've had over the last many, many years, many generations, is you go to the government and you say, "Hey, I have $100,000. I know you guys need money. I know you guys are in debt. I know you would love to have that $100,000. What can you give me if I let you hold on to it? Obviously, you're going to give it back. I'm just lending it to you." And the government says, "Well, it depends how long you're going to let me keep it. If you're going to let me keep it for 10 years, I'll give you, let's say, 4%." And for a lot of times throughout history, that was a fair deal because the individual or the nation or whoever was issuing the money to the government was comfortable that they would give it back and they don't need it anyway. So 4% sounds pretty good because the number that they are told inflation is 2%. So if you give me 4%, I might lose 2%, but I'm getting 4. So I'm making money in this transaction. I'm gaining purchasing power just by letting you have this money that you're going to give back to me. So that's the general way bonds work. So as you can imagine, if people don't want to lend that money to the government for 4%, the government is forced to offer 4.5%. And then people start offering it. And if they offer 4.5%, but people still don't want to lend them money, they have to offer 5%. And there's a range where they're comfortable, the government is comfortable being in a range, but once it gets to a certain point, they're not comfortable anymore. They don't want to offer you more than 5% for a 10-year bond. And there's all sorts of financial engineering and things going on behind the scenes and offshore accounts and money printing and these things go on to keep these bond yields artificially low. That's how it has functioned. Up until recently, there's been a multitude of factors that have made it very hard for them to even cheat to make them under 5%. Once the 10-year gets to about 5%, the Treasury steps in. Soon enough, the Federal Reserve will be stepping in to do everything that they can to not let that happen because it doesn't look good. I mean, there's a lot of reasons why, but it doesn't look good when nobody even wants your bonds at 5% because that forces them to think, Why does nobody want these things? Should I want them?" It's not only a psychological thing, but if you zoom out, there's a lot of systems that are built upon this structure. And once the yields get too high and they have to pay too much money back to these people that are lending them money, things stop functioning properly. And an example of this is if other nations are owning the United States equity the United States equity markets, the stock market, if that's made up by other nations who have a big stake in that system, and those other nations also have bonds, if that yield gets too high, these other nations start to wonder, is my money even safe with those people? And if that happens, they will feel the need to take money out of not only the bond market, but the stock market, the equity market. And as you can imagine, this is a chain reaction, and both things are leaning on each other, like a house of cards. They're leaning against each other, and if one was going to fall, they both fall. And they are well aware of this. The Treasury is, the government is. And that's why it's their job to not let this happen. So that is one layer of it. And then we have foreign wars that cost a lot of money. We have entitlements, money that are owed to senior citizens. We have the credit that is issued all over the world, both consumer credit within America, as well as credit for things like the AI infrastructure build out. All this money that is being spent that isn't actual money, that also is leaning on these two fragile systems. And if you think about the current events that have been happening recently, there's more than one, more than two, more than three factors that are all putting a lot of pressure on the bond market and the United States government. For example, I talked about it in my last video, but the Treasury had to basically step in and intervene with the Japanese yen to dollar ratio. So, excuse me, the Japanese yen, they have their own sovereign debt crisis that's bubbling up in their bond and equity markets. And if they were to need to sell something to support their own bonds or to purchase energy as it gets more expensive, they're going to start looking at what they can sell. And the United States wants nothing less than for them to have to sell something, our assets, our bonds, our equities, our dollars. So they're going to do everything they can to keep the yen artificially high against the dollar. And so what they did was they sold euros and they bought yen. And they set up an avenue for that to happen again in the future if it's needed. These things are out in the open. It's not, it's, there's probably a lot of points in history where this type of funny business was going on, but it wasn't out in the open. It sends a strong message to everyone who's listening that you should not have debt to the government. You should not own their bonds. You should not have debt, consumer debt. You shouldn't have any type of debt because what's happening is that debt is valued in fiat currency. It's valued in dollars. And the government itself is in $40 trillion of debt. And they are doing all of this fugazi nonsense behind the scenes to keep the the bond yields low, to keep their equity markets propped up, to keep the AI infrastructure build out going, to keep their foreign wars going. They're doing all these things that cost money that they don't have. And so you wouldn't lend to them. If you had an alcoholic family member who just always was causing problems for everyone around them, and they were always asking if you could lend them $100, you'd probably do it because you care for them. You would do it a certain amount of times. If you can observe their actions and see that they're just being destructive to themselves and those around them, at a certain point you're going to stop giving them $100, no matter how much they need it. That's the situation that individuals, other nations, all entities are in with the United States government. It's out in the open that their debt might not be a good investment because, as I was about to say, debt is measured in fiat. They're printing the fiat. They're forced to print the fiat because themselves are in the debt. And they're the only ones with the tool to devalue that debt. When they devalue the debt, what they're doing is devaluing the dollar because it's easier to pay $100,000 back when $100,000 isn't as valuable in terms of real world goods like energy and real estate and Bitcoin and gold. It's a lot easier for them to devalue the dollar against those things and then pay the debt back. But for you, if you have debt or if you have bonds, they're doing that and it's not helping you at all. It's hurting you because now you have to come up with that same amount of money to pay whoever you owe back. But it's way harder because your salary is the same, your wage is the same, but now you owe more money. And the only way out of being trapped in this and being hurt by this and the second and third order derivatives of this process is to own something that exists completely outside of all of this. And the only things that fit that category, in my understanding, is Bitcoin and gold. And in my opinion, this is all of a sudden a debate, but uh, equities that are directly correlated with Bitcoin, strategy, and metaplanet. You can include Strive if you would like. These things move with Bitcoin. Bitcoin moves with dollar liquidity. The more inflated asset prices get, the higher Bitcoin goes. So, in a way, it's protecting you. And it's why my philosophy has become 100% Bitcoin. Or I know that that's not where a lot of people are, 10% Bitcoin, 10% gold. The rest, whatever you think is the best, whatever you think will protect you, that's fine. But to not have 5 to 10% of your assets, of your time and energy that you're trying to store in Bitcoin or gold is a huge mistake. Because when you look at the landscape, things are accelerating and it's going to get out of hand very quickly. And this is just 48 hours into this process beginning. This process has been going on, and it's the reason I've been making these videos because the writing is on the wall for all of this, but it is officially started. It's not a mistake that Bitcoin jumped 12% in the last 2 days. It became public that the Treasury is actually going to be buying back $4 billion of treasuries instead of 10, or I'm sorry, instead of two of the 10 years. Sorry. But this is an entity that's in $40 trillion of debt, and it's not in dollars. They cannot inflate the dollar to the point of the debt being marginal because they owe people's grandparents hip surgery and doctors' time, and they owe this nation, quote unquote, protection in the wars that they fight. You cannot print weapons. You cannot print hips. You can't print knees. You can't print gasoline. You can't print red meat. You can't print the things that the government needs to sustain itself. And they're going to sustain themselves. So they're going to print the dollars and devalue the hell out of them. And this isn't new either. This process has been going on for as long as civilization has existed. Governments become corrupt and they print the dollars, the currencies, the whatever is used to value time and energy, they create it. And when it gets to a certain point, the only people that have any hope and any chance are the people that don't hold that thing. And you can maybe get by if you somehow have real estate or you have enough money to be able to get by with holding an index, but the times are changing and they're changing rapidly. And a lot of intelligent people believe that Bitcoin is the S&P 500 of the future of the digitalized economy. And so it wouldn't be a bad idea to put a percent of the money that you make into that. Over time, maybe you won't be as hurt by these things that I'm talking about because people will be hurt. And I don't mean to sound cynical, and I'm not a doomer. I'm very optimistic about the future of the country, the civilization, us as individuals. I believe there's a lot of hope and optimism to be had. However, we have to be prepared. And as someone who's trying to keep up with these things, I can't look at what's going on with the bond market and with the debt situation in general and not try to tell everybody. You have to put your time and energy in another place because the dollar used to work. And I mean, it never worked, but it worked to the point where you wouldn't have your life materially negatively impacted qu quickly over short periods of time. And I think that that's exactly what's about to happen. So I appreciate you listening to the video. If you did, like I said, it might not be the most uplifting conversation today, but if you look at it from the flip side, and that if you do have gold, if you do have Bitcoin, if you are keeping up with these things, if you do have shares of strategy and MetaPlanet, this everything I'm saying is what you've been waiting for, essentially. You've been waiting for the dollar to get smoked and your asset to 3x. So good things on the horizon for those that are saving in hard money. Probably not the case for those that aren't. And that has been the theme. So I appreciate you listening. This is a bit of a long one. I apologize for that, but I'll be back with another video soon. Thank you.